Looking for the best way to grow your wealth in 2025? Today, we're breaking down our top 3 investment picks: gold, silver, and land, and why they could be the key to building generational wealth. Disclaimer: we are not financial advisors. This is educational content. Always do your own research before investing. For millennia, gold has been the ultimate symbol of wealth and power. Its allure isn't just cultural, it's rooted in its physical properties. Gold is rare, chemically stable, and doesn't corrode, making it the perfect store of value. Ancient civilizations, from the Egyptians to the Romans, recognized this, using it as the bedrock of their economies. Long before the concept of fiat money, currency backed only by government decree, gold was the universal standard. It was real, tangible wealth you could hold in your hand, a stark contrast to the abstract financial instruments of today. This brings us to its most critical function in a modern portfolio: protection. Unlike cash in a savings account, which is constantly eroded by inflation, gold possesses an intrinsic value that cannot be arbitrarily created. Central banks can print trillions of dollars, diluting the value of their currency, but they can't print more gold. This fundamental scarcity makes it an unparalleled hedge against economic uncertainty and currency devaluation. When investors lose faith in paper assets, they historically flock to gold, driving up its value. So let's talk about what that means for actual returns. Consider this scenario. If you had invested in a gold fund, an ETF, or even physical bullion instead of simply letting your money sit in a bank account over the last decade, the difference in your net worth would be staggering. While cash lost purchasing power year after year, gold not only preserved wealth, but generated substantial capital gains. Your returns would have been massive. This isn't about short-term speculation, it's about long-term strategy. Gold acts as a stabilizing force in a diversified portfolio, protecting against inflation while offering consistent, steady growth over time. For any serious investor looking to build and preserve wealth for generations, gold isn't just an option, it's a cornerstone. For centuries, silver has been known as gold's more volatile sibling. Historically, their prices have moved in tandem. When investors flock to the safety of gold during times of economic uncertainty, silver typically follows suit. This strong correlation has made silver a popular alternative for those looking to invest in precious metals, but at a more accessible price point. However, this historical relationship is only part of the story, and recently, a significant divergence has started to appear, creating what many analysts see as a unique investment window. Unlike gold, which is primarily a monetary and jewelry asset, over half of all silver demand comes from industrial applications. In recent years, this demand has skyrocketed. Silver is an essential component in the world's most critical growth sectors. It's a key material in 5G technology, enabling faster and more reliable communication. It's indispensable for electric vehicles, used in everything from battery connections to onboard electronics. And it's a cornerstone of the green energy revolution, as a vital conductive layer in solar panels. This dual role as both a precious metal and an essential industrial commodity gives silver a unique and powerful dynamic. This brings us to a crucial metric: the silver to gold ratio. This ratio simply tells you how many ounces of silver it takes to buy 1 ounce of gold. Historically, this ratio has averaged around 50 to 1. Right now, it's hovering at historically high levels, meaning silver is significantly undervalued compared to gold. When this ratio is stretched, it often signals a coming correction where silver's price is expected to rise faster than gold's, to return to its historical average. This suggests that silver isn't just cheap, it's historically cheap. Because of this undervaluation, silver has significantly more upside potential. Its price is more volatile, which means that during a bull market for precious metals, silver often outperforms gold. For example, if gold were to increase by 5%, it's not uncommon for silver to rally by 7%, 8%, or even more. This leverage effect is why many investors turn to silver when they anticipate a rise in precious metal prices. Why does this happen? There are 2 main reasons. First, silver has a much smaller market capitalization compared to gold. The entire silver market is just a fraction of the size of the gold market. This means that even relatively small inflows of investment capital can have a much larger impact on its price, creating more significant percentage gains for investors. Second, and critically, silver gets consumed. The industrial silver used in electronics, solar panels, and vehicles is often used in such small quantities that it's not economical to recycle. It's effectively gone forever. This constant industrial consumption creates a structural deficit, making the available supply increasingly scarce while demand continues to rise. This combination of scarcity and essential demand provides a strong fundamental floor for its price. With its historical undervaluation, explosive industrial demand, and smaller market size, investing in silver now could represent a major growth opportunity heading into 2025. When most people think of real estate investing, they picture houses, condos, or apartment buildings. But what if the most powerful opportunities lie in the very ground beneath them? Why invest in raw land instead of a pre-built property? The answer lies in control and potential. With traditional real estate, you're often dealing with tenants, maintenance, and market fluctuations tied to existing structures. Land, on the other hand, is a blank canvas. It offers a unique opportunity not just for passive appreciation, but for what investors call forced appreciation, creating value where none existed before. Let's look at a real-world example of how this works. Meet Tony. In 2023, after careful research, he identified a promising parcel of land and purchased it for $165,000. He made it a cash purchase. No loans, no credit checks, no interest payments eating into his future profits. This gave him significant negotiating power and a clean slate. In just over a year, without him lifting a finger, the local market pushed the value of that same land to over $230,000. That's a passive return of nearly 40%. But for a savvy investor like Tony, that's just the beginning. The real value wasn't just in owning the land, it was in its potential. Tony is now executing a plan to build 5 modern townhouses on the property. This is the forced appreciation phase. By developing the land to its highest and best use, its value will skyrocket far beyond the passive market increase. His strategy is brilliant in its simplicity. He'll partner with a builder to construct all 5 units. Then, he'll sell 2 of them immediately. The proceeds from those 2 sales are projected to cover the entire construction cost for all 5 homes. This means he'll own the remaining 3 townhouses free and clear, creating an instant portfolio of income-generating rental properties with zero capital tied up in their construction. This massive upside was created simply by identifying the right piece of land with the right zoning and development opportunities. It required due diligence, patience, and a clear vision for creating value. But the result is a powerful financial engine, built from scratch. This is how you make your money work for you in ways a simple savings account or even a traditional rental property never could. You're not just buying an asset. You're building a wealth-generating system from the ground up. So there you have it, our top 3 investments for 2025: gold, silver, and land. If used wisely, these assets can create wealth for generations. You don't need a high income to grow your money. You just need to know where to invest it, have a little patience, and stay consistent. Remember, we are not financial advisors, so do your own research and invest responsibly. But by collecting these 3 assets, you're positioning yourself for long-term financial success.